All right, ladies and gentlemen, traders, welcome back to another Relentless recap. As you guys are tuning in, be sure to hit that thumbs up, and if you're a new viewer, as you watch throughout the video, consider subscribing to our channel. Before we talk about the disclaimer, I do want to quickly mention for transparency's sake, I want to quickly show you guys this week and the last 2 days because I did not upload a recap yesterday. I was down 145, and the day before I was down 280. So Relentless, why did you not upload a recap? Well, I got a little lazy. This is one of the things of essentially being your own boss and being a business owner. You have to push yourself sometimes. And yesterday was such a small red day. I'm like, man, it's not really that worth it, but still sometimes just to go up there, 3 minute video, 4 minute video, quickly going over the day, it's not bad. But we've been on this grind for years, but you gotta do what you gotta do. Now Tuesday, on the other hand, I think was definitely worth a recap. We had a hot stock on this day, and I tried to size up aggressive. I tried to go for the biggest share size, the biggest position I've ever traded so far this year, essentially. Stock halted up. Hey, can I be in this thing with big size and looking to go aggressive? Now, because of that, I got a little antsy, got a little anxious, wasn't on my game. Took about four poor trades, forcing things, and ultimately did not trade to the best of my abilities. If I kept my normal size, it's kind of ironic. If I had kept my normal size, I would have ended this day green, because there were trades where I hesitated on because I knew the amount of risk I was taking. And one of those trades was a halt resumption trade. I wanted a dip and rip, but the stock opened up and held the open of the resumption very tightly, pushed up about 10-15 cents, and came back and held the resumption price, the open, very well. Usually we'll open, rip, then dip, and then rip again, right? So we call it the dip and then the rip. Being that we pushed up, we didn't really dip. I didn't take the trade. I thought it was too aggressive. But you know what? If I had my normal size, I would have took it. Why? Because I'm comfortable taking that type of loss with my normal size of 1500. And that resulted into a 40-cent move, which would have been $600 with my normal shares. And again, I would have never been anxious. I would have never been antsy. And I could have continued to finish this day and maybe make about 1600 because I was already up a decent amount. So, it's one of those things with the market where if you change the strategy for one reason or another, share size, it can be greed or fear, that, once you make that adjustment in the wrong direction, you're now trading a completely new strategy, and there's no back testing for that. And that was my issue on Tuesday. If not, we should have had a lovely day. But you know how it goes. You guys know how it goes. The stock that we traded was ADTX. Lovely stock. Lovely stock in ADTX. We definitely could have done better, but that's how it goes. So let's come back up. Let's go to the calendar. So we were green Monday, red, and then green again here today. So we'll talk a little bit more about today's recap in a bit. Again, we did have C4 Therapeutics stock CCCC on Tuesday and Wednesday. Tuesday, I thought it was a little slower moving. Likewise, Wednesday in the morning session, I thought this thing was a little slower moving. So if we pull it up here on the 1 minute chart, if we go back to Monday, this is kind of what we were dealing with. Lows of 180, a high of $2 eventually. Just didn't think it was great. Ended up leaving it alone. And then Tuesday, we took a few trades. We were up 240 on this one, despite ending the day red on the other stock. It wasn't bad, but it wasn't great at the same time, but it did have a little bit more range. So I think ultimately, with the price going up, we saw a little bit more volatility. And what was disappointing was that I did witness most of this here from about 1 p.m. I did witness a ton of this, but I was on a FaceTime call with one of the students doing a mentor session. And it was a great mentor session, a lot of constructive criticism, even for me, good feedback from me, and how I could be a better teacher. And so it was a great session. Could I have ended the session early to trade the stock? Yes. But sometimes you got to do what you got to do, and we have to make sure to respect other people and their time, right? But I think I could have ended the day green trading this area here from about the new high of day. What was that? 460 to highs of $6. I definitely think in this area I could have managed to get another couple $100, maybe 500, I'd say 400, and I could have put myself, even if it was small green on the day, 100, 2, 3, 400 would have been good. But again, opportunity will cost. Not only that, we had FOMC at 2 p.m. So the Fed spoke, and at this point, I completely switched from small caps over to my portfolio. As you guys may or may not know, I've been building a portfolio, and right now it's in the beginning stages. So I'm active, I'm paying attention, I'm trying to see, what I want to do in terms of buying, selling, adding, holding, and things like that. But yeah, we'll talk about today right now. We'll get into today's session. So we could have ended yesterday green if we traded this area. Lastly, guys, just remember, you got to have that balance, right? Whether it's trading and doing the 9 to 5, trading and being a teacher, or something else, it's part of the deal. You got to make sure you structure your time properly, and you you gotta have a good balance. You gotta have a good schedule. Make sure you're doing everything that you must to have that separation in between the different tasks you have to do throughout the day. All right. So before we jump into today's recap, just quickly the disclaimer, right? Remember, guys, that trading is risky. Remember, a lot of people are having a hard time. A lot of people are losing, right? So it's best, if you're not making money consistently, to reduce your risk. You can do so by utilizing a simulator. That's where you can practice trading the live market with artificial currency. And lastly, you can, of course, use risk money, a small amount of cash that if you lose it does not affect your lifestyle or your livelihood. All right. Other than that, remember that the live streams and recaps are never an invitation to copy trade. There's a detailed system, and we can talk more about it later, right? We'll talk more about the classes later here in the video. Other than that, remember to be careful with the impersonators. There's a lot of people pretending to be me. Remember, I do not invest money for my subscribers. I never did. I never will. I will never ask you for money or personal information. And lastly, I will never message you first. Okay, so let's jump back into the recap. The number one question that I'll get is relentless, or let's say questions with an S, plural. Relentless. How do you find the stocks that you trade? What patterns and edges were you looking to trade? And lastly, how did you manage risk on your positions? So those are the 3 questions we're going to tackle here. So I showed you guys already how the week has been going, just for transparency's sake. We're not hiding anything here. So Momo Pro. And of course, you can see I have a Momo Pro shirt on, so you definitely know I'm biased in Momo Pro's favor because, ultimately, this is the scanning software, and I do get paid to promote the software, and this is the software that I use. But this is what I will say, because I'm a very transparent and fair person. Do you need Momo Pro to be successful in the markets? The answer is no. This is just the scanner that I use. If you guys also want to use it, you can. There's a discount code down below. But if you don't want to use it, if you have something else that's suffice, that works, that's good, then you already can find the scans, the stocks that you're looking for in scans, right? So in my case, Momo Pro. Let's come on down to the discovery section, which is included in the Momo Pro Plus, and let's come on down to the Relentless Momo filter. In the morning, it's important to mention that I don't even use this filter that I have here. I use the no filter in the morning, which shows me everything, stocks below $1, etc. You'll see here on this particular filter, I do not have stocks over, or let's say rather below $1. But anyhows, let's take a look at this list here. So we're filtering for percentage gain, volume, float, and the gap up on the day, as well as relative volume. So coming down, And the stock that I traded today in C4 Therapeutics sold off a lot. So in fact, what percentage are we at now? It's down 1%. So I have to scroll all the way down. It should be on here, but we got to come all the way down. Can we do Control F? Is it gonna work? CCCC? Is that gonna work? Yeah, this stock sold off tremendous. Well, yeah, we'll be going down for a while. This stock sold off tremendously. And we'll look at the charting just now, but yeah, it's all the way down to -1%. Well, that's okay. It, as I would say jokingly in the community, it has went to the depths, right? And it's also a good reason why we should never hold these stocks past our stop loss. So when we talk about risk management, Relentless, how are you managing risk? I was making sure to never hold the stock against my risk, right? The area where I thought if it broke down, it was looking weak, no longer good for the setup that I was trading. So from a low of 5 to a high up here of 830 and right back down to 5 all within one day. Isn't that crazy? So anyhow, that's how I found the stock that I traded here today, right? Now let's talk about the patterns and edges that I've looked at. So a pattern is straightforward, right? A pattern is um, a collection of candlesticks that represents a depiction of something that we know here in the real world, whether it's like a bull flag, the W, the ABCD, um, wedges, things like that. That's what the patterns are, right? So, for example, one of the first pattern that we'll see here is a quick flag. Picture your country's flag. You have a pole and you have either like a triangular or sometimes even like a rectangular shape. And I really should be using my drawing tool to do this instead. Right? So that's what our flag would look like. So right here, we have a green candle going up as our pole. And then we kind of have that consolidation, right? And this is essentially a bull flag. So from a low of 538, we had a high of 568. From there, we proceeded to then have a red candle with a low of 54. So from 68, we dropped to 54. And it's very common for stocks to hold up levels like the whole dollar area or half dollar area. I don't believe in quarter dollar. I think that's nonsense. But I think half and whole dollars make a lot more sense. So, the the 50 increment, right? We held up above 50 with 54. Even if you don't even care about whole dollar and half dollar, let's forget about that. Let's say you don't even care about that. Okay, well, how am I looking to manage risk? Relentless. We had a high of 68. Okay, we understand. We have a low of 54. Now, the next candles is typically a good area, a good place to start looking. All right, we've now double bottomed here. We had a low of 53. 54, 53, basically the same thing, right? So we essentially have a double bottom. If I'm going to buy this stock for the 1 minute candle to make a new high, my risk needs to be no more greater than 50. There's no reason why I should be holding this thing down at 30, 20, 10, and this is how we can keep a tight stop. So the high of the candle is 61. Let's say I'm buying for the candle to make a new high, which is a trigger point we would look to get in to see the resolution of this type of pattern. So the high is at 61. I'll say, okay, I'll buy 62, 63, but I know for sure I should not be stopping out any lower than 50. And even then, you have to think about your stop and your risk to reward. So from 62 to 50 is about 12 cents. You might say, man, you know what? I don't want to risk 12 cents. What if you only want to risk 5 cents? Then okay, you move your stop higher. Maybe you move your stop to 56, 58. Hey, if this thing comes down, it doesn't want to go immediately, I'll get out and then I'll get back in. If you want to look for that longer hold, you want to give it more room, then you might say, hey, I think unless it breaks down 50, it's still pretty strong. So whether you're in at 62 or 50 or 55, anywhere within this area, you can determine, well, I can't say 50 because we didn't break down below 53, but you can get in the entry and determine the risk that's appropriate for yourself and what you're comfortable with. And I think also expectations, because for a pattern like this, even if I'm comfortable losing 50 cents, should I really be losing 50 cents on a pattern like this? I think the answer is no, right? So I'm in, my stop is tight, about 5 cents, no more, or break even if possible. And from 61, we went not only to 68 right here, right? We didn't go just only to 68 coming across, but all the way up to $6. That's about a 30-cent move. To make the mathematics simple, we're gonna assume we're using 1,000 shares. Oh, wrong thing, not that. If we're using 1,000 shares, so for anybody who's brand new to day trading and the stock market, and you're wondering how we generate money, how do we make money, and how much we're risking, right? Let's assume I'm using 1,000 shares, right? 1K. We're going to put this in very simple terms so everybody who's watching, brand new expert, can understand. All right. If I buy 1,000 shares at 562, right? 1,000 shares at 5.62. I'm not a mathematician. I was pretty poor at math in school. I was a C student, as some of you guys may know, or may or may not know. So what we'll do is 1,000 times 5.62, and that will give us $5,620. This is actual dollars, right? I'll be using $5,620, but I'm in with 1,000 shares. So I'll be in. I'll hit a market order. I'll hit the buy button right here. I'll put 1,000, and I'll hit the buy button when the stock is right at 162, and I'm risking 5 cents. So with 1,000 shares, every penny the stock goes up or down, I can make or lose $10. All right. So remember, we said, what's my risk? If I'm in and I lose 5 cents, then I'll be down $50, right? $10 for every penny. So if I go down 5 pennies, I'll lose $50. That's my risk. I'm out of the trade. And remember, the dollar amount that I'm trading with is 5,620. So if you take the loss and you minus $50 from this amount, that's what you would end up with after the trade. Now, if you take this trade and this stock goes up from 62 like it did all the way to 6, maybe you don't capture the entire thing. Maybe you got in slightly higher, 64. Maybe you got out at, let's say, 88. What is 60? What is 88 less 64? That's 24 cents, right? So what you'll do is 1,000 times 24 cents, 0.24. You would have made $240 in this particular area here on this, well, over here on this green candle. This is just in case anybody is very new who is watching. Those of you who are already, seasoned, you can definitely skip through this. But this is how we can make money on this green candle right here. Now, the goal is, for my style of trading, my strategy is, can I do this repeatedly? We can see that we had this candle, and in terms of just the sizable candles, right? We had this one, there's over here, there's over here, there's over here. How can I do this repeatedly and avoid, buying in high and selling low and avoiding those losses? That is the key of what we're doing. Avoiding areas like this where it's just, big, because if I'm in here and I'm selling here, I'm taking a big loss, and either I'm giving back the gains I have or I'm taking losses. And so whether you're using a free commission structure or a paid commission structure, discipline is the ultimate key. Can you be disciplined towards the system here that we have? Because what happens to people and how they end up losing, they will know that they need to get out at worst case 53. But the stock will give a red candle to 53. Instead of selling, they hold, and then they hold, and then they hold, and then they hold, and then that's what we call being in the depths. We must cut the trade. We must cut the trade. And so if we can have this, there's a lot more to it when it comes to, of course, the experience, understanding candlesticks, understanding patterns, looking at it every day, screen time, reviewing. But you can get to a place, if we're putting in the work, where we can become disciplined to cut our losses. And I think that's the best thing, the best asset we can have in our favor when it comes to risk management. So this is a bull flag. This is another bull flag right here. Some people say relentless. We think you do better on other patterns and edges. Well, here's the bull flag shining today. 1, 2, it comes up. We start to, we get a bit of a topping wick, which means there's some selling here at the end of that candle. But then we start to consolidate, and this flag ends up breaking down. But then what do? We curl right back up. And then again, we got the pole, we got that little triangle, the 1 minute candle makes the new high, and you can see I'm ranksing and repeating, ranksing and repeating. And, over time, you'll say relentless. How do you know when to sell this stock? How do you know to not just keep holding because it's going to go like this? Well, I'm also using an instrument called level 2, right? Which allows me, this is what it looks like. This right here, where you see all these colors, yellow, red, green, blue, pink. This particular instrument allows me to see buyers and sellers, where people are looking to buy, where people are looking to sell, and orders that are coming through real time, which is called the tape right here, right? This on this particular side. And of course, hold on. Let me just bring up today's video just to kind of give a quick example of what the level 2 looks like. All right, ladies and gentlemen, traders, is this good evening. And no, that's not it. That's me on another recap I tried to do, recording the wrong screen for 5 minutes. This is the level 2 here. Hello. So throughout the course of the day, again, where are people looking to buy, where are people looking to sell, and the orders that are going through right now on the right hand side right here, the tape. So when the stock is pushing up, let's rewind this video here. When the stock is pushing up like this, I'm also keeping in mind, where were we, where were we, and where are we now, right? Two big factors. Where were we and where are we now? Okay, we just had another pattern, because this thing gave a huge red to green pattern down here, right? Bottoming wick, pricing in our low, holding up, huge red to green pattern into another pattern, the bull flag. And so, all right, we went from a low of about 6 all the way to 640, 660. Now we went from 660 to 680. At a certain point, you got to understand that the stocks will not go up forever without giving a move back down. And in economics, we learn about supply and demand. There's been a ton of demand down here, and then again right here into these patterns. We have to understand that we're getting into a place where we might need to pull back, get a bit of a breathing room, and then maybe go again. So depending on the expectation and the pattern that we just saw, we can decide, what, man, I think I need to take the trade that I have right now off. I think I need to take this trade off. If I'm not looking for a quick scalp, I don't want to be buying high and looking to hold longer. So even if you see me buying like this right here, I'm looking for a quick scalp. You see, I'm already out. I thought we could have pushed over 84 in that moment. Hey, if we're not, I want to be out, and I want to be waiting again in case this thing drops down, right? So when it comes to selling, again, for me, can I make a couple of cents? Oh, going back to this example of making that 240 on this green candle, and again, we're not looking to buy the very bottom, sell the very top. If I can just make, with 1,000 shares, 5 cents, which is $50, over and over, we'll have losing trades. We'll buy some areas that we think look good based on the pattern, and we'll end up losing as well. But throughout all of the trades that I take throughout the day, the collection of trades, can I be net green? Can I maybe let's say make 80 cents, lost 30 cents, ending the day still net green? That's the kind of thing I'm looking at. And if I end the day net green 50 cents on 1,000 shares, I'm up 500 bucks. And you know, it doesn't have to be 1,000 shares. It can be 100 shares. It can be 10 shares. It can be 1 share. But if you can consistently do it with any amount of shares, you know, on the smaller side, there is enough liquidity right now to increase risk even more and maybe be able to do it with 5,000 shares. With 5,000 shares, 50 cents, you're making $2,500 on a day. All right. So the bull flag was one of the patterns that we had today that was shining, and that's the basis of the strategy. What else do I, guys? There's over 17 patterns that I look for, and we also have what we call edges, which are price action trades. Depending on how the instrument level 2 is moving, again, the buyers, sellers, and where orders are coming in real time, based off of that, I can make decisions on the fly to potentially buy or sell in areas where I think we might have high probability to continue, despite the pattern might being overdone, failed, or extended, right? So right here, the 3-bar play, stock goes up, we have a small pullback, and then we make the new high. Then again, and within this, we're still seeing the baby pullback. This is where we pull back without a red candle. We got a high of 710. It quickly drops down to 703 right here. Let's see, 710 comes down to 703. And remember I mentioned the whole dollar, right? It held up the whole dollar here. And from 703, 750. And then again, what was this? Another flag. Now, did this flag fail? This is what we call the false breakout. The flag ended up failing. But before this candle was red, it was a full body green candle here. And so this is the type of thing that we want to see. And so when this candle made the new high over 42, it went all the way to 77. Between 42 and 77, is there time to sell if you're looking to just take that 5, 10, 15 cents over and over and over? Of course there is. So we don't need to still be holding this down and then it turning red on us. Worst case scenario, if we didn't get to sell, we're cutting it either break even or at the lows, wherever we are comfortable as the trader cutting the stop. For me, I want to sell it for a gain. I don't even want it to come back down on me. A lot of times you guys will see I'm out of the trade too soon. It's just, you know, mentally how I interpret things. I think it's best for me, you know, me knowing myself and the collection of things I know about me, how I want to treat the trade. If you are a little bit more comfortable, you can give the stocks more time, especially once you have that experience, you understand how things are moving, you know, or you can be on the other, on the other side of the spectrum, which is you're super, super active, you know, taking even more trades than someone like myself do, and you're in and out over and over, right? So that's how it goes. And again, we do get caught in some areas. Do we take losses? Of course. You know, an area like this, if you're not quick to get out, it can drop down on you. But there are early warning signs, especially as you start to gain the experience as a trader. Right in here, we're on a bear flag, which is the opposite. So instead of getting, and we can remove this drawing out of the way. Instead of having the bull flag, which we just depicted like this, or again rectangular, now we're having the opposite, which is a bear flag, right? The bear flag. So look at this. Down, and then boom. This is the bear flag. So there's a high, there's a low, and we're consolidating. Can we get back to the upside? Okay. We come down. We have the panic flush, bottoming wick. Panic flush, bottoming wick. Right? Bullish engulfing right here. This green candle essentially engulfs this red candle. This is a pretty strong sign for us. And not only there, but the first time it comes down, it gets all the way back to this level here. Because we had this high, flush down, and then all the way back up right to that high. And then what does it do? It flushes down again, all the way back up to this level, and then some more. It shows some weakness. I thought this was some weakness here. I thought we should have held up better. It flushes down, but then this gave me confidence again. Instead of staying down and going lower, right back up to this area again. So I'm like, okay, if we get over this area and we can hold above this area, which is the high of the flag, we're probably going to be able to do something. So within this bear flag, we're seeing a smaller bull flag. And right here, I did take a small loss thinking that this was going to keep going like that. I took a small loss right here. But then I'm still watching. We're still holding up here. And I'm like, all right, we're now within this whole consolidation, right? We're getting a miniature consolidation. Can we go up, or will this consolidation go down and it maybe break the low of the support? What is it going to do? It's going to go up. And so we're having a longer flag, a bit of a 3-bar play here, and then boom, erupts. And from 760, we go all the way to 810 right there. And in those areas are the places where we're looking to buy, have a tight stop, and sell higher. Guys, I can't give it to you all in a recap. It's impossible. It's impossible for me to sit here on a 30-minute, 1 hour recap and give you my entire strategy. Though there will be people who become profitable from watching me, because from time to time I'll do this and they'll get a small piece of what I'm doing. But why punish yourself like that when you can have everything at your disposal right here, right now, for just 600 bucks? And not only will you have everything at your disposal for just 600 bucks, you'll have unlimited access to myself and the other mentors in Marcelo and Tim. Guys, I have a course that is structured from zero to advanced. I sat there myself and I'm saying, how would I had approached the market, as a beginner, right? In terms of like what well, let me rephrase that. What would a beginner trader want to know? From start to finish. How should I organize this? What should we wear? And so I organize the classes in, if you might say, chronological order. It's progressive. It's easy to digest. Let's come down to the material itself. It's easy to digest. It doesn't matter if you know nothing or if you know a decent amount. We go slowly, slowly. The basics of day trading. We continue finding stocks to trade. We go all the way down, recognizing the setups, the patterns, pre-market analysis, daily chart analysis, intraday analysis, the 200 EMA and its significance on the daily chart. We talk about level 2, that instrument that I just showed up there, right? Risk management, hotkeys. We talk about a routine, trading styles, right? Guys, so we talk about, if you're looking to hold longer, if you're looking to be, scalping, hyper scalping, right? So it's all here. The edges, everything that we look for, guys, it is all here. All right. Trading psychology, and not only is this here, but you have the video that I just showed, right? So I mentioned, hey, this is the video from today and how I did all the way down here. This is today's video. So if you want to go and see, on the right hand side of the screen, okay, I'm up 2400 at this point. How did I go from being up 24 to 28 and then to 3K and then to 3.4 and then to 4.7? If you want to see exactly where I'm buying, where I'm selling, and this isn't for anyone to just come and try to mimic and copy trade. It's about learning the patterns, learning the edges, and being able to trade for yourself so that you can trade it without even listening to me on the live stream and understand where I'm buying, where I'm selling, and why. That's what the classes are designed for. So if you're interested, be sure to check it out. And do not punish yourself on those recaps. You might say 600 bucks is a lot. It really isn't. In the grand scheme of time, $600 is nothing. And it'll get you everything you need right here, right now. And if it's for a year, it's a subscription, it's for a year. And if you do the math, it's like 50 bucks a month. We're spending 50 bucks a month on other things that are not even going to benefit us in our future, right? We go to the bar, we spend $80 and a couple drinks. So when it comes to our education and our future, we should not hold back. The gold option includes everything, including one-on-one mentorships, weekly lectures, or rather weekly Q&As, ongoing lectures, and we do have a chat room that you'll have access to, which includes halt scanners, actual scanners, and much, much more. So, guys, be sure to join the classes, right? So when I say, hey, do not copy trade, it's because it's very detailed what we're doing. I can't go over everything in a 30-minute recap and then you expect yourself to be profitable. It's the same thing with like a TikTok. If I post a 30-second TikTok saying I made 4,000, how in the world could somebody expect that they could watch that TikTok and know who I am, know what I'm doing, and be able to judge me? It's just nonsense. We have to go deeper. We have to deep dive. That people can take the time to see, okay, what is this person doing? They're live streaming. Oh my goodness, they're live streaming their trades. Let me try and at least listen in, watch on, see what I can pick up. You know? So this stuff is here for whoever wants it. At the end of the day, I look forward to the market being my main source of income always. You know, I think when it's all said and done, if I can continue to provide for myself from the markets, that's all that matters. The course and stuff like that is just there, for those people who might need it. Is it a business opportunity? Of course, but at the end of the day, it's not the main focus. It's why I don't answer questions that I trade. I don't do none of that because at the end of the day, it's in the course material. And that's why the course is here. That's why we do one-on-one mentorships. As I trade, I need to be focusing on trading and trading only. With that being said, ladies and gentlemen, it's been a very long, detailed recap. Hit that thumbs up. Subscribe to the channel if you're new. I'll catch you guys bright and early tomorrow morning. What I'll say to end it off is whoever knows, knows. And hopefully those of you watching till the end understand the position that we're in and what we can potentially become if we master this art. You've been watching me for a long time. I went from, flat to small green to 50 bucks on a day to 100 bucks in a day to now being able to make 4,000 in a day. It's absolutely incredible. It's amazing. And we're still only scratching the surface. With that being said, remember, if you can see it in your mind, you can hold it in your hands. Let's continue to chase down our greatness. Never stop, never settle. Let's continue to demand the best self, our best self. Let's keep digging deep for our best self and let's keep chasing greatness. It's been Relentless Trader. It's been a full recap. Stay safe, stay green. I'll catch you guys in the next one.